If you own an S Corp and work at the S Corp as well, it's a big IRS gray area on how much you pay yourself as an employee. Well, there's a couple big incentives to pay yourself as little as possible, but it's got to be reasonable. What are those rules? I've got all that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, if you have a small business, at what point do you consider should it be an S Corp? Okay, and what's the benefit of it? And a lot of it is, well, the taxation on the profits of your business have a very unique treatment with an S Corp, and it creates a couple incentives for, well, how should you structure your own pay as the business owner? So I want to get into that and then help, tell you some of the guardrails as well, but it's no substitute for sitting down and actually working with a CFP who's doing your tax planning, working and collaborating with your CPA. A lot of times CPAs, or you're looking at your tax preparer saying, hey, can you give me some guidance here? When, should I stay a sole proprietorship? Should I be an LLC? Should I do this S Corp thing? What should I do? And most CPAs don't give you a thorough answer. They'll give you a quick answer. And the quick answer sometimes can mean, I don't really want to deal with this right now. And because it's subjective, there's a little bit of, well, I don't know what the futures hold, so should you do this S Corp? I don't know. That's why you've got to be working with a certified financial planner, not just a CFP who helps you with retirement or manages your investments, but someone that's doing comprehensive financial planning because they care very much about your tax situation, doing tax planning, as well as, well, then how does this impact your cash flow? How does it impact your ability to save up for retirement? I mean, so making the recommendation of, no, stay a sole proprietorship or be an LLC, but have it taxed as a sole proprietorship or do this sub-S election, that's very much in the wheelhouse of the creativity, the advice that your financial planner, your CFP should provide. But essentially, if you are just running a side business and you get some side income, 10 grand, 15 grand, something like that, but it's mostly on the side, most likely you're gonna wanna have an LLC, so you've got limited liability. Okay, that if you hang a shingle, but the shingle falls and hurts someone, you've got protection there between the activities of your business and that operation and the rest of your financial life, the rest of your livelihood. So it's hard to argue, well, stay a sole proprietorship and not get an LLC. Okay, I'll just throw that out there. But at what point would you consider having that LLC be treated from a tax standpoint as an S Corp, or just officially creating a corporation and having it taxed as an S Corp, small corporation? That depends on how big your company is and a lot of other factors. How many shareholders do you eventually want, and those sorts of things? What's your growth trajectory? But a lot of times, and at least for the sake of this video, it's how much revenue do you have? How much profits do you have? And typically, gosh, there isn't a great rule of thumb, but if your profits, if your revenue minus all of your expenses are, 100,000 or more, could argue 75,000 or more, then you're going to really want to consider this and on an ongoing basis. If that's the threshold of profits on an ongoing basis, and you project it probably could be, going up from there, you're going to want to talk to a CFP whether the S Corp makes a lot of sense. And here's why. The S Corporation has a unique tax treatment that is beneficial. It's technically a pass-through entity and makes it beneficial. And there's two reasons why it's beneficial. But to understand those, you've got to know that, well, if you and when you make your LLC a subchapter S or make your corporation a subchapter S, you are working, you own the business, but you're also working in the business. So how you structure your salary, how you pay yourself is very, very, very important because yes, you own the business, but you're also an employee of the business. And the IRS states that your wages, what you pay yourself, not as a withdrawal or something like that, but actually as payroll, a salary, you've got to pay yourself a fair and reasonable compensation. And therefore, there's no objectivity to that. They don't tell you an exact formula. They don't tell you an exact number. They don't break it down by role or by industry and say this is how much you should pay yourself. It just needs to be reasonable, fair and reasonable. And you want to take a look and say, well, what is that in my situation? Because again, there's two very, very clear incentives to pay yourself as little as possible. I'll explain that in just a second. But I'm here to tell you, you've got to make sure that it's still fair and reasonable. You've got to work with your CFP who's doing tax planning, working with your CPA to determine what would be defensible, what would be reasonable. So to better understand this, as a small business, you've got all of your income, all of your revenue, minus all of your expenses, and that equals your profit, okay? Your profit. And yet that profit has two special treatments when it comes to an S Corp, okay? But when you pay yourself a wage as an owner, when you pay yourself a wage, a salary, well, that's an expense. So that increases your expenses. Your revenue stays the same. By how much you pay yourself either increases your expenses a lot or decreases if you pay yourself very little. And therefore, increasing your expenses reduces your profit. Or if you pay yourself a lot, that will increase your expenses. It will reduce your profits. Make sense? Or if you say, well, I'm going to pay myself very little, now my profits are going to look bigger, right? Because you, as the owner, you have complete control over how much you pay yourself as a salary, and that influences how big those expenses are and influences your profit. Get it? Okay, so it's kind of confusing, especially just communicating with my words and hands. That can be, challenging to follow. But here are the two incentives. Okay, now these are incentives to keep your salary as low as possible, but I'm telling you all of this because it still needs to be fair and reasonable. The first reason is your salary, what you pay yourself, you're going to have to report as on a W-2, and you're going to have to claim it as income. So you're going to pay on whatever your salary is, whatever your wage is. You got to pay federal taxes, state and local taxes if you live in a state that has those. But then you also have to pay that four-letter F word, FICA taxes, okay? But you also own the business. And the business matches those FICA taxes via payroll taxes. So whatever you pay yourself as a wage, you've got to pay federal tax, state and local tax, and essentially self-employment tax or FICA tax times 2. So 7.65 times 10 plus 7.65, 15.3% on up to that Social Security wage limit, and then just Medicare after that. But that's what you have to pay on your salary. Any profits from the business also land on your tax return. So all your business income minus expenses leads you to your profits. Whether you distribute those, withdraw those or not, those profits land on your tax return via something called a K-1. And because they land on your tax return, they're subject to federal tax as well as state and local taxes. But they are not subject to FICA tax. They are not subject to payroll tax because it's not payroll. Therefore, this is the first incentive to look and say, well, you know what, I'm going to pay myself as little salary as possible because that means I have a little salary and bigger profits, and that little salary will be subject to federal, state, and FICA taxes and payroll tax. But the larger salary now will only be subject to federal tax and state and local tax. So there's that incentive. The second incentive is a new tax deduction that was introduced about 5 years ago, but I'm an oldster, so that still feels new to me, a qualified business income deduction. The qualified business income deduction has a lot of rules to it, and there's lots of videos out there. We've created some about understanding those rules, but depends on how much your total income is. And then if your income is above a certain level, it depends on what industry you're in. And that determines, how much your qualified business income deduction is. But say, for lack of, getting into all those nuances, say that your total income is below their thresholds of, call it $360,000, something like that. Then your qualified business income deduction, so a tax deduction that doesn't impact your state returns, it will impact your federal return, is 20% of what your profit is. So the higher your profit, the more you have to pay in taxes, but the higher your qualified business income deduction is because it's 20% of it. Therefore, because of how this works, it incentivizes you to lower your salary. That increases your profit, which then 20% of a bigger number means you've got a bigger deduction. If you say, nah, I'm gonna pay myself a big bonus, I'm going to pay myself a really big salary. Well, a big salary for you as the business owner then reduces your profits and reduces this qualified business income deduction. So two very inherent conflicts and reasons, tax reasons why you want to, as a business owner, keep your salary as low as possible. But guys, despite those conflicts, it has to be a fair and reasonable wage. It has to be a fair and reasonable wage because your salary needs to be defensible just in case there's an audit or whatever in the eyes of the IRS. Now, this is subjective. There's no clear rule with this, and this has, been right in the sweet spot. The Congress has been taking aim at this issue. It wouldn't surprise me if we get more details in the future about how you calculate this. But in the short term, you can look up your role or your job. You can look it up online and look for average compensation on this, right? And then talk to your CFP and so on. Find out what a fair and reasonable wage is. If you were to say, well, I'm just running the business, or I'm some absentee owner, I'm not working in the business, what would I have to pay someone to do the role that I'm doing? That should help you determine what a fair and reasonable wage is. If you think, well, I don't know, I'll just, $200,000, and that's way above what would be normal, guys, there's clear incentives to no, find out what's fair and reasonable, pay yourself that, and not anymore, unless you want to pay more in Social Security system and so on. But work with your certified financial planner on that. If you own a small business that you believe should be structured as an S Corp or maybe as an LLC, and you think it should have a sub-S election, that's the time to engage a certified financial planner, one that's doing comprehensive financial planning, can work with your CPA, collaborate with you to determine what is a fair and reasonable wage, at what threshold of profit, of income would it make sense to file this sub-S, and then how should you fund retirement accounts, because that has some challenges with it based on these deductions and so on, some huge opportunities, but it's not as apparent to everyone. So work with your CFP for that confidence, clarity, and creativity. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.